Hello and welcome back to Moneycontrol's live stream. You're watching Closing Bell with me, Lovisha, Darad. And, we've seen an intraday recovery in this choppy market sentiment. And Nifty has managed to hold its ground despite the tech rout that we have seen. So, yes, Nifty has recovered about 200 points from the day's low. And it has extended the surge to about the third consecutive day. If you look at Sensex, also up by about 100 points. So, yes, it's rebounded about nearly 800 points from the day's low. So, yes, we did start off in the red, flat with a negative bias. But if you look at after 3 or 1 o'clock, the picture has definitely reversed and Nifty is back into the green. And of course, we've seen a sustained recovery from those levels. And right now, Nifty is above that 25,700 odd levels. But from a sectoral perspective, it's the Bank Nifty index which has been better placed than the benchmark index. It has been outperforming the benchmark index with about 0.3% gains. But other than that, it's the benchmark indices which have also outperformed the benchmarks, the broader end of the markets. That's your Nifty mid-cap index up by about 0.7%, Nifty small-cap index leading the way with about 1% gains. So yes, broader end of the markets definitely the shining point of the day. But yes, what is not doing well in this market is definitely the severe meltdown that we are seeing in the Nifty IT pack, right now down with about 6% cut, and all of the Nifty IT constituents have been bleeding in the negative trajectory. Of course, this is coming on the back of the new AI tool which has been announced by Anthropic, and of course which is why we are seeing not just in the Indian markets the tech rout, but of course we've seen a deep sell-off in the US markets, and of course in the European markets also. Majority of the advertising, publishing, legal stocks have taken quite a bit of a hit. So yes, if you look at the Nifty IT index, definitely it's seeing a little bit of a pressure. Infosys leading the way with about 7% decline, TCS, Coforge, LTI, Mindtree, all of them seeing quite a bit of a deep cuts. But yes, Nifty IT index, it's also seeing one of the biggest single day drop since COVID, March 2020. So yes, that's one of the biggest single day declines that the IT sector has been facing at the present. But yes, apart from the Nifty IT sector, it's the Nifty Pharma Index which is sulking in the trade today. 0.2% declines coming in for the Pharma Index. And of course, after the 2-day run-up that we've seen in the Nifty Pharma Index, today it's been sulking in the trade. But apart from that, its majority of the sectoral indices have been trading in the green. If you look at Nifty Auto Index, that's seeing a gain of about nearly 1%. PSU banks have been doing well, 0.9%. Nifty Metal Index also with about 1% gains. So all of them have been continuing their buying frenzy to about the third consecutive day itself. But yes, it's the if you look at the defense stocks, they have snapped the 2-day winning streak. A little bit of a profit booking which is taking place for there. But yes, apart from that, if you look at the Nifty 50 gainers and losers of how they stack up on the Nifty 50 charts, if you look at the top gainer, you can see Eternal with about 5% gains. Trent also doing well with about 5% gains. ONGC after yesterday's sell-off, today seeing a bit of a pullback with about 4% gains. NTPC and Max Healthcare, some of the other gainers on the Nifty 50. But on the flip side, what's not doing well on the Nifty 50? That includes the likes of Infosys, TCS, HCL Tech. So all the IT stocks have been dominating and contributing to the Nifty's downside at this point of time. But yes, to understand how the last minutes of the trade looks like and of course how you should be positioned, let's quickly move on and talk to our technical expert of the show. Joining me is Ashish Bahety of ProfitMart Securities. Ashish, good afternoon. Of course, some range-bound activity, but Nifty has still managed to hold its ground. So yes, now that the budget is out, US trade deal is also done. Can we expect Nifty to resume its uptrend to 26,000?
Good afternoon, Lovisha. Yesterday was the test of exuberance and today was the test of endurance for Nifty. And I'll say despite the IT index downs almost 5 to 6%, most of the IT stocks were down 5 to 6%. Nifty have been able to stay in green and probably will going to give a green closing. So that's really impressive from the Nifty perspective. We've seen a good run up or a good jump in yesterday's trade, and there's a continuation of that uptrend. So that's positive. Nifty, I think till the time it stays above its 20 daily, in fact, till the time it doesn't break today's low, every dip should be used as a buying opportunity. On the upside, yes, 26,000 can act as a resistance. But if we surpass 26,000, we may even see 26,400 kind of a level. So that's like we may again head towards all-time high on the Nifty. Best part is the Reliance has been contributing on the upside, which was a dragger, and on the Bank Nifty is contributing equally for Nifty. So we've seen a good momentum in ICICI today. It's trading above its 2200 daily exponential moving average. So Bank Nifty is relatively looking very strong because there's no Nifty IT there. So Bank Nifty is a buy on dip candidate on the downside. 59,900 is acting as a support area. However, on the upside, we assume that Bank Nifty may hit 61,000 soon.
Okay, all right. That's the view coming in for there. And of course, we have seen good up move that's coming in from the Bank Nifty index. And of course, like you rightly pointed out, that it's a day of endurance after a day of exuberance. But yes, Ashish, the major headline today has been the meltdown in IT stocks. Infosys, TCS, all of them are down by about 7 to 8%. And it's been a global tech rout on the back of the Anthropic's new AI tool. How serious do you think the reaction is on the Indian IT sector?
See, I assume that's my personal opinion that the threat is real. We've been using cloud for a very long time for our HFT platforms, also for our programming for related to stock market. And I think these companies will have a tough time, specifically the large cap IT, and that's where we're seeing the pressure. However, we think the mid cap IT may sail through this entire turbulence time, but for the large cap IT, they may have a bigger issues or bigger problems. So large cap IT remains a selling opportunity, or every pullback can be used as a shorting opportunity in the large cap IT. However, if somebody has to go long, or if somebody has to trade the pullbacks, mid cap IT would be a go-to counter.
Okay, mid-cap IT could be the go-to counter. But yes, we have seen that, the large cuts are also coming in from the mid-cap IT. Of course, all the entire IT ecosystem has been quite trading with a bit of a cuts. But yes, it's the textile stocks which is continuing to see the buying traction today. After hitting 20% upper circuits, we can see that Gokuldas Exports, Indocount Industries, both of them have been seeing double-digit gains. Ashish, for you, textile stocks, can we expect more room for these counters to strengthen?
Certainly, some of these stocks are looking good. However, one has to remain cautious because thinly traded sector as a whole, not much of the, big market cap companies here. So, Gokuldas Export has given a significantly nice pullback from the lows of 550, which was trading in the last week. So any dip can be used here as a buying opportunity, but not to chase the momentum right now.
Okay, all right. Not to chase the momentum. But what about the shrimp stocks? Would you actually say the same for them? Apex Frozen, Avanti Foods, they are once again doing well today.
Yeah, so the same lies, in fact, the entire trade deal related, these small micro cap counters, in fact, mid cap counters also. One should not chase the momentum here because they may see a reversal pretty soon. If there's any devil in the fine prints of these deals. So one should remain cautious. Dip can be used as a buying opportunity, but not to chase the momentum in these stocks. If anybody is long, just trail the SL.
Okay, not to chase the momentum for both of these export-oriented names. All right, let's move on and talk about Hindustan Aeronautics. The stock is seeing a sharp fall today, 5.5% cut coming in for there. And definitely this is coming after the report. One of the reports suggested that the company is out of race to develop a stealth fighter jet. Now, what the reports also said that this will be the first time that the company will not be involved in a significant military project. Ashish, what do you make of this significant breakdown on the counter?
Certainly looks negative from both the chart point of view, the price action point of view, and the psychological point of view also, where we have seen few of the new entrants have been given a priority over HL, which is the, I'll say, maverick in their space for this entire aircraft. However, coming to the price action on the trading perspective, we think that the HL might even touch 4,000 level. So it's a good shot on rise can be used here. On the upside, 4,300 should be kept as a stop loss area.
Okay. Okay, all right. Let's move on and talk about another stock in focus. That's your Varun Beverages. Well, the stock is down by about 1% after its fourth quarter results, which came out yesterday, and we did have some street verdict on it. Brokerages reactions came out. We saw that Citi maintained its buy call on the counter, but they've cut the target price to about 575 rupees. And what they've said that despite delivering a steady fourth quarter, the trends in the India business were quite mixed. The domestic volumes rose by about 10.5% on a year-on-year basis, but the realizations saw a single-digit decline. And even Jeffries also has reduced their target price to about 550 rupees, and they have flagged management commentary, which is pointing to higher market discounts, which has raised some concerns around the competition. And right, as a result of which, we are seeing that the stock is also down today. Ashish, what do you make of the fall? Because not just today, but the stock has been declining in the last couple of sessions.
So the stock was almost a poster child for Indian consumption story after the COVID, and we've seen a stellar rise in BBL after COVID till 2024, and after 2025 when it was introduced to FNO, we've seen every pullback is getting used as a shorting opportunity here, and there's no respite on the stock. So even stock is not able to hold above 200 daily exponential moving average. So the stock's looking under pressure, but this is the zone where stock has taken a pause on the downside at least 4 times in last 1.5 year. Since 2025 February, also the stock moved up from the same level. So this looks like a strong support area. If, however, 420 is broken, we may see severe downside. But we assume that stock may take support here and again do a bounce back till 480.
Okay, all right, that's the view. All right, let's move on and talk about another stock in focus. That's your Angel One. The stock is near its day's high level and it's up by about 4% itself. And this comes after the company reported a good trading activity in the month of January with its average daily turnover more than doubling on a year-on-year basis. But yes, coming to you, Ashish, for Angel One, the stock has done quite well. The stock, even in the past 1 month, is up by about 11%. What can we expect next?
See, the entire long-term story is intact for all these capital market and ancillary stocks. We've seen, despite the STT cut and despite the budget day fall, we've seen a good reversal in most of these stocks, be it MCX, be it Angel One or BSE. So buying interest is intact here in these stocks. Any dip can be used as a buying opportunity. A fresh buy can be also initiated here. Our strict stop loss should be maintained near 2620 zone. On the upside, we think 2770 is also possible.
Okay, that's the view coming in for this particular counter. Angel One, right now also the stock is seeing a gain of about 4%. But yes, another stock which is doing quite well, that's your Yes Bank. The stock is up by about 1%, given that the company approved appointment of Vinay Tonse as the new MD and CEO, which is why the street has been appreciating the new appointment. But yes, despite today's reaction, the stock hasn't done quite well in the past 1 month, down by about 5%. Ashish, what levels can we track here for Yes Bank?
See, the stock has been continuous disappointment, despite seeing such a positive news flows we've seen there's a selling pressure remains intact. On the downside, yes, 1121 is a strong support area. However, on the upside, we think 2250 is a very strong resistance area.
Okay, all right. That's the view coming in for Yes Bank. But yes, let's talk about Bajaj Finance, how the stock has been doing at this point of time. The stock has been fairly quiet, range bound in today's trading session, following its December quarter figures. Right now, the stock is down by about nearly 0.1%. And this is coming after the company reported its third quarter earnings, where their accelerated expected credit loss provisioning emerged as one of the key negatives for the quarter. And even then, the company has reported a one-time gain of about 1,400 crore rupees from the sale of its part of its stake in Bajaj Housing Finance to comply with RBI's minimum public shareholding norms. But despite that, we can see that the stock is not doing well, flat with about negative bias. Ashish, what do you make of the moves? Stock definitely tried an attempt from the recovery from the lows, but still it's succumbed to selling pressure today.
So see, the stock has been a perfect portfolio stock, and our recommendation is not to chase it from the trading perspective, but to accumulate it from on a portfolio level. This stock has always, gives a 20-25% kind of a dip in a year, and again makes a fresh high year on year. So this dip can be used as a buying opportunity. Stock is already corrected almost 15 to 18% from its recent all-time high, which it made in October 2025. So from that point, stock is already down 15%. This dip can be used as a buying opportunity. Despite a little bit of a cautious or a quarterly numbers, we've seen there's no sell-off or there's a good recovery from the downside. Stock did hit 944 in the intraday low, but there's a good recovery or a buying interest in the stock. Stock has been able to surpass its 200 daily exponential moving average. So we assume the stock may hit even 1,000 plus kind of a level soon in coming trading sessions. So our recommendation is to accumulate from the portfolio perspective.
Okay, all right. That's the view for Bajaj Finance. Let's move on and talk about Devyani International. The stock is up by about 6% after the stock has done quite well after its third quarter performance. Though it did see a wider net loss in the third quarter, but the company has posted a healthy growth in its top line. If you look at the revenue figures, up by about 11% on a year-on-year basis. EBITDA, which is the operational performance, has also done quite well. Ashish, a good breakout on the charts today, definitely visible at this point of time also, 6% gains. But do you think that the gains will sustain, given that last couple of sessions and of course last few months also we have seen the stock has been underperforming?
Certainly. So since September, we've seen a bit of sell-off in this stock. However, if you'll see on the daily chart, stock is kind of making a rounding bottom formation. And in today's trading session, also stock was almost made an attempt to surpass its 20 daily exponential moving average. With the clean price volume action, we assume that bottom is almost kind of made. So one can go long here by keeping a stop loss near 118. On the upside, we assume 140 can also be visible on the charts.
Okay, all right. That is the view for Devyani International. We can expect some gains in the upcoming session, and we'll watch out how the stock behaves. But it's another stock which is not doing well. That's your DAM Capital. The stock declined up to 6% in today's trading session, but right now the stock has recovered from this day's low levels with about 2.5% decline. So yes, this is coming after the company reported about 61.5% decline in its net profit. Revenue also fell by about 32% on a year-on-year basis, and which is why we're seeing a significant pressure in the counter. Ashish, not just today, but of course, the counter has seen about 18% fall in the past 1 month. Do you expect further fall ahead?
So it was almost a good IPO when it came somewhere around 2024, and the stock was primarily focused on the IPO segment as a merchant banker. However, despite we've seen market doing fairly well for the IPO and the merchant banker segment, this stock has not done well on both on the terms of numbers and in terms of price action as well. The stock is all trading near its all-time low, and we assume there may be some more selling pressure here. So our advice is to stay away from the stock. Fresh long can be only initiated if stock surpasses 190 above.
Okay, all right. 190 can be the next resistance zones for this particular counter. But yes, let's talk about Emami stock. The stock has seen a significant breakout right now. 2.5% gains, nearly 3% gains coming in for the counter after its third quarter results. And what the numbers speak is that they have reported about a volume growth during the quarter, which is up by about 9% on a year-on-year basis, which is why the top line has also increased on a 10% year-on-year basis. EBITDA has also grown by about 13% on a year-on-year basis, and as a result of which margins have remained fairly stable at 33%. You can see, however, the stock has seen a good breakout today after 5% decline last month itself. Ashish, Emami's strong breakout, can we expect the gains to sustain going ahead?
There was a sharp reaction after the numbers were announced today, and stock almost hit for 528 as an intraday high. However, after that, there was a bit of profit taking in stock, so slipped below its 500 zone. So it's a little bit of wait and watch. Let the dust settle in, and probably if stock sustains above 500 in tomorrow's trading session, it can be a good buying opportunity. On the downside, 490 should be kept as a stop loss. On the upside, we assume that 540 is possible if the 500 breakout is there on the charts.
Okay, all right. That's the view for Imami. 500 breakout could be on the charts. That's something that we'll be watching out for. But yes, another stock which has been one of the top buzzes of the day, that's your Ramco Systems, up by about nearly 14% after promoter Ramco Management bought about an additional stake in the company through its bulk deal. Ashish, not just today, but the stock itself has seen quite a bit of a jump after January 23rd, 20% jump. So what are you making sense of this sentiment?
Yeah, so from last, let's say from the last 7 to 8 trading sessions, we've seen stock is making continuously higher highs, and from the low of 412, which was almost from the January last week, stock is trading at 570 kind of a level. So there's a good buying interest in the stock, and we've seen with volume breakout, the stock has been getting accumulated. So a dip can be used here as a buying opportunity. On the downside, one should keep a stop loss near 530. On the upside, we assume stock may hit 650 kind of a level.
Okay, all right. That's the view for Ramco Systems. But yes, let's talk more about another stock in focus. That's your Lloyd Metals. The stock is definitely seeing a sharp bump up, and that is one of the most in 3 years, given that their margins have strongly expanded in this third quarter. Now, what they've reported is that the margins have expanded to about 35% from 32% in the year ago period, and profit has nearly doubled in the third quarter itself, which is why we are seeing a strong reaction in the stock price of the company. EBIT has also increased by about 30% to 36% for the mining company annually, and from sequential basis also it's a 55% increase. Lloyd Metals, any views on the counter, Ashish?
So there's a good bounce back today from the recent lows, and there's a fairly well buying interest here among the investors. However, one should not chase this momentum right now. Let the dust settle in. Probably any dip can be used here as a buying opportunity. On the downside, one should keep a stop loss near 1250. On the upside, 1350 is a resistance zone.
Okay, all right. 1350 is the resistance zones for Lloyd Metals. All right, let's move on and talk about another stock in focus. That's your RITES. The stock has done well, given that it's reported its decent third quarter numbers. Revenue is up by about 6% on a year-on-year basis. Profit has modestly increased by about 2% on a year-on-year basis. Operating performance is done well. EBITDA is up by about 21.5%. And if you look at the margins, they have seen a notable expansion to about 23.4%. RITES, any thoughts on this particular counter, Ashish?
So some of these engineering companies and related to railways are doing good right now. So on the rights, stock has been consolidating near the 220 to 215 kind of a zone. We assume the upside rally may resume and stock may hit 240 level. On the downside, one should keep a stop loss near 220.
Okay, all right. That's the view coming in for the counter. But yes, let's talk more about First Source Solutions. Well, the stock has fallen today with about 2% losses coming in, given that the company's net profit has declined by about 25% on a year-on-year basis. But the top line has increased by about 16% on a year-on-year basis. But yes, Ashish, First Source, any thoughts on this particular counter? Because in the past 1 month, we've seen that the stock has plummeted by about 9%.
So yes, I mean, again, BPO kind of a stock which may hit badly because of the AI related disruption. So one should stay cautious here. The price action is also not very comforting. On the downside, we assume that stock may even hit 290. So buying is not recommended in this stock at this level.
Buying is not recommended for First Source. That's the cue, and that's the key takeaway for First Source. But yes, let's move on and talk about Tamil Nadu Mercantile Bank. The stock is seeing a good move today on the back of its December quarter performance. If you look at the third quarter performance from the net profit perspective, it's up by about 13% on a year-on-year basis. Net interest income is also up by about 13%, and asset quality indicators definitely show a sequential improvement in the performance. If you look at the GNPA, that has declined by about to 0.91 levels, while the net NPAs have also eased in the third quarter itself, and which is why we are seeing a strong reaction in the stock price today itself. Ashish, not just today, but the structural trend of the stock also looks quite positive. What levels can we watch out next?
So yeah, so not just, this bank, we've seen all the smaller private as well as public banks doing fairly well. So TMB is looking good on the charts. One can chase the momentum here certainly by keeping a strict stop loss near 605. On the upside, we assume that 680 is also possible.
Okay, 680 is also possible for this particular counter. All right, just a few seconds to go before we go to the market close, and of course see what the final rates look like on the Nifty 50, given that the kind of intraday recovery we have seen for the benchmark index. So yes, it has settled flat, but with a positive bias above that 25,700 odd levels. 10 points gain. So it's a very marginal set of gains for the Nifty 50 at this point of time. So yes, apart from that, if you look at Sensex, it's settled flat but with a negative bias. So it's been a very range bound day for the markets. It's from the day's high levels also, you can see Nifty 50 index has cooled off from those levels, but still managed to hold its ground, given that the buying we have seen in the banking stocks, despite the rout that we saw in the IT names today. But yes, the broader end of the markets have stood quite resilient. They have outperformed the benchmark indices, and from the broader end of the markets, it is the small caps which have stood out today. Nifty small cap index is definitely settled with quite a bit of a gains at this point of time. If you look at the Nifty small cap index, up by about nearly 1% itself. So yes, all in all, the Nifty 50 continues to see its upsurge for the third consecutive day. But yes, apart from the Nifty 50 small cap and the mid caps, it's the India Wix that has shown a relative cool off, 3% decline coming in for the India Wix. So that signals that, there is not an immediate panic in the markets at this point of time. Given that we have seen that the budget is already done, and of course the US-India trade deal is also out, so the markets have been looking for the next trigger at this point of time. So yes, apart from that, from a sectoral perspective, like I was talking about, the Anthropic AI new tool fears have crippled the Nifty IT sector, which is why they've seen one of the biggest single day decline today since the March 2020. Right now, with settling with about 6% decline. Other than that, it's your Nifty Pharma Index, which is also losing after the 2-day set of gains, 0.4% decline coming in for the Nifty Pharma Index too. Private banks also seeing a bit of a pullback, but apart from that, autos, consumer durables, metals, PSU banks, realty index, all of them have done quite well today. But let's take a look at how the Nifty 50 gainers and losers look like at this point of time. Trent has done well, 5% gains coming in for there. Eternal with about nearly 4.5% gains. ONGC, NTPC has done quite well with about 3 to 2% gains. So yes, all in all, we have seen that that majority of the sectoral and stocks, about 38 stocks have advanced on the Nifty 50, while 12 stocks have declined. But on the converse picture, let's take a look at how the Nifty 50 losers look like. Infosys, we're seeing a decline of about 7%. TCS with about 7% decline. HCL Tech Mahindra, Wipro, all of the Nifty 50, all the Nifty IT majors, definitely the IT heavyweights have been weighing in into the benchmark index, which is why we're seeing a bit of a range bound and of course a choppy session today. But yes, let's talk more about Trent, given that the company is set to report its third quarter results, which is why we're seeing a bit of a buying interest which is coming in for the counter. Coming back to you, Ashish, for Trent, how does the stock look like from a near-term perspective?
So we have seen stocks slipping almost by 55% from the all-time high it made, and I think valuation-wise and even the price action-wise, stock is looking really attractive at these levels. There's a bit of reversal is clearly visible on the charts. So I think before the numbers, one can buy here by keeping a stop loss near 39.30. On the upside, we assume that 4,200 is also possible on the charts.
Okay, all right. That's the view coming in for Trent. But yes, let's talk more about Eternal also. The stock is seeing quite a bit of a buying interest on the charts. Ashish, what do you make sense of the sentiment? And of course, how does the near-term perspective looks like for this counter?
So stock surpassed its 200 daily exponential moving average today, and there've been a resistance area near 300. We assume that once that is broken, or the stock takes over the 300 zone, we may see even 320 and 330 also possible on the charts. So those who are holding long should stay invested by keeping or trailing the SL near 285.
Okay, all right. All right, let's move on and talk more about stocks in focus. It's your Keynes Technologies, which has also been doing quite well. 6% gains coming in for this particular counter, and even Dixon Technologies. So both the EMS stocks have done quite well from the mid-cap basket. Ashish, what do you make of this sentiment? Of course, the EMS stocks have done quite well today.
So I think not just, I mean, along with the EMS, I think white good stocks are also seeing a good buying interest. They've seen a lot of beating in last year. So there's a bit of reversal or a relief rally here. On the upside, however, 3,900 can be it will be a strong resistance area. On the downside, however, stock has made a strong support near 3,650.
That's the view coming in for EMS stocks. But let's talk more about Tube Investments, how this particular counter has been doing. If you look at Tube Investments, the stock has seen quite a bit for gains, given that it delivered a strong performance for the December quarter. It reported about 17% on a year-on-year increase in its net profit. On the other hand, revenues grew by about 13% on a year-on-year basis. Operating performance also remained quite strong. EBITDA increased by about 27%. Yes, coming to you, Ashish, for Tube Investments, any levels that we are watching out for?
So on the upside, we assume the stock may even touch 2,800 kind of a level. On the downside, there is a strong support area near 2,550.
Okay, all right. All right, just one last question before we let you go, Ashish. Any topics that you want to highlight now that the trade deal overhang is also out, and of course the budget is also out of the way at this point of time?
So both REC and PFC is looking good. Among the two, REC is more of a preferred buy for us right now. Stock is just near its 200 daily exponential moving average, and if it surpasses that, we may see 404 kind of a level on the charts. On the downside, one should maintain a stop loss near 375.
Okay, all right. All right, Ashish, with that we have to let you go, but thank you so much for your time and joining us. All right, definitely a good day for the markets today, despite the meltdown that we have seen for the IT stocks, because it was the banking stocks which helped offset any of the meltdown that came out from the tech stocks today. But yes, to talk more about markets and of course what's the way ahead, joining me is Anand Rathi, co-founder of MIRA Money. Anand, good afternoon. It's been a range-bound day. Some consolidation was expected given the kind of rally we have seen yesterday. But what is the trade sentiment you're gathering as of now?
Good afternoon. Yes, mostly it is positive. A lot of happiness around that. At least one big sword that was hanging around our neck is almost over. So there is a lot of positivity around the market sentiments per se. But to be honest, this is one less thing to worry about now. But there are no clear joy that I still see from the markets. If you actually see the Q3 results, which I thought would be very good, it is not as good as I would have generally liked it to be. So while this joy can bring in some bit of an up move, but I'm really doubting, how much can it go up from here, because there is not much of a good news left, at least at this point in time.
Okay, no good news left at this point of time. Anand, what are you making of the IT stocks severe meltdown today? I mean, with it being one of the top sectoral underperformers, and not just us, it's a global tech rout on the back of the new AI tool fears. So last year we saw DeepSeek's emergence wiping billions of dollars, and now this. Even brokerages are flagging that it would impact core businesses of IT companies. What are you making sense of all of this?
Yes, and in fact, IT was one of our contra calls for last 5, 6 months or so, but post the news today, we have actually called it off. We believe that this pain could last for some more time. There could be a bit of a rebound, so maybe that is one of the opportunities for you to exit out of it. Primarily because though the AI revenue from most of the companies that have announced results in India look pretty good, but I think with more and more AI stream coming through, the expected fear is turning out to be real. And when things become real, it could be very nasty. So what my larger take is that we are okay to give off the gains that we may see from ID pack, but we are not really okay for the kind of volatility, uncertainty it will bring into the table. So we are clearly exiting out of our sectoral positions in IT as we speak at this point in time.
Okay, got it. Anand, what about the export-oriented sectors? Textile, shrimp stocks, they continue to seeing buying interest after the trade deal. So what shift can we expect fundamentally? Because several of the companies earlier were diversifying their exports out of US, but now with the trade deal, what is the kind of impact that you see?
One of the good things that has happened with the trade deal and the tariff is that they are now thinking beyond US. They are thinking, New Zealand. They're thinking Europe and many other countries. So in a way, trade deal is a blessing in disguise for a lot of these government people. I do have a few folks who work there. I did check with them in the recent days. They were very happy about the European deal. Plus, the same applies for seafood in general. So my view is that let's say initially most of the companies should ideally go back to their older pricing or valuation, and eventually once the diversification that they've done in the last 1 year start showing some results, which ideally should turn out to be a better revenue or better profit growth, I think then we should see a sustained rally. So in a way, it's a blessing in disguise. So I'm happy that the tariffs have come through well, and it has also helped these companies to diversify across. So the rally particularly should continue for some more time.
Okay. In terms of earnings, are you expecting a significant, re-rating to happen in the next couple of quarters?
Not re-rating on the earnings side, but I definitely feel that the valuation, the PE, should ideally go up because, as I was saying, in the initial period, I was saying that the hangover of tariff is done. It was a big sword hanging around on our neck. So now we can actually breathe a little bit of a sigh of relief. Of course, we need to see more details on what is impacting, what is not getting impacted, and things like that. But with the sigh of relief, ideally the valuation should go back to normal, and then the diversification should kick in, which will help us to bring in more profits to these companies. So ideally, I see in the next maybe after 2-3 quarters, you should see significant revenue jump and also earnings growth.
Got it. But, let's talk more about sectors. I'll talk about first auto companies. Once again, they have seen a double-digit increase in their wholesale volumes in January. Do you think that this is one of the sector that investors can comfortably look at? And this is one of the sector that's completely a go-to as of now?
It is. Only thing is you need to be a little careful of how much you want to allocate. Autos continue to do well. There are a lot of offers on the table. More and more, financial institutions are participating in giving off sizable amount of loans for making autos affordable. So, in my view, this rally that we have seen could also continue because it is translating into proper revenues and proper earnings growth. So, I think auto as a sector is something that you can hold on. But please make sure that you do not over allocate at this point in time because the price rally has already, the sector's price has already run up significantly. Be very wary of how much you want to allocate, but should definitely have this as a part of your portfolio, if not exclusively, but at least via few funds and sector funds that you can actually participate into.
Okay, got it. Anand, what about some of the auto ancillary names, Bharat Forge, Sona, BLW, because they derive a lot of their top line from the US markets. Can we take a relook at them too?
Ideally, yes, but then it is not generally going to lead to immediate revenue growth. It is going to be a little slow. But as I said earlier, I think the entire tariff can be looked at a way in which the valuations of many of these companies or the matrix of these companies will actually improve. Maybe first go back to, let's say, 2023 levels, maybe then go back to 2024 levels. So ideally, that is where it will go before we see any significant revenue or EPS growth.
Okay, got it. But Anand, you can see the rupee that is weakened once again today. Yesterday we were celebrating its a percent appreciation. So today once again, it's back to its depreciation at this point of time. So can we at least expect it to resume back to its the normal trajectory, and of course the pre-tariff rates? That is still a long-term horizon, but at least to stabilize at this point of time.
You're right. I think it is not going to go up significantly from here, is my view. Maybe a 92, maybe a 93 at best. But in general, it is a little overvalued at this point in time, going by the real matrix that everyone follows. It's a little overvalued. So you may see some bit of a correction. But we live in a world which is very uncertain, which is even the policies are uncertain. You're not believing your neighbors. You don't believe in the developed market. So during these times, a slightly weakened currency like ours can continue its downward trajectory before any kind of semblance of stability comes in. So my view is it may go to 92, 93 before coming and settling down around 90 or so this year. May not be significant upside, may not go down significantly also.
Okay, got it. All right. On that note, we have to let you go, Anand, but thank you so much for your time and joining us.
Thank you.
All right, that's all the time we have for this edition of Closing Bell. Of course, the Nifty has managed to hold its ground today, but we'll watch out how the upcoming sessions looks like. Of course, just 2 days left for the next trading sessions, and we'll watch out how the Nifty moves ahead. For now, it's a wrap from me, and thank you for watching.